thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. Well, these are the top headlines that we're tracking at this hour. It's a muted start to the trading week. Most sectoral indices trade with cuts, whereas pharma and the PSU banking index are the only sectoral gainers. The CBI names former Punjab National Bank MD and CEO Usha Ananthasubramaniam and 2 executive directors in its charge sheet in the Nirav Modi case. Dena Bank stock has hit 15-year low after the RBI asked the lender to stop fresh credit exposure. And FMCG major Hindustan Unilever will be reporting its fourth quarter numbers today.
And we'll be watching out for that as well. Viewers, thanks for tuning in to Countdown. My name is Neeraj Shah and the markets are flat as flat can be. You wouldn't expect anything otherwise any which way. So it's a very flat day of trade. Some bit of downward bias maybe for the Nifty, but the Sensex is flat. The Nifty Bank is lying absolutely flat. And I don't think there is too much of a deviation from the script from the mid caps and the small caps. Sure, they would be correcting a bit more than what the large caps have done. But if you look at the BSE mid cap or the NSE mid cap and the BSE small cap indices as well, about 1% par for the course, nothing really too untoward. The market breadth though, from about 12 noon or maybe 11 a.m. worsened considerably. It's almost a sharp overlap, and then the number of advances far outweighing the number of declines in the session today. So the market breadth remains fairly pensive yet another day. Look at that. That happened early morning at about 10:30 odd. Since then the gap has been yawning, so not too great out here. I'll quickly bring up the heat map and show you what's happening. We started with a fair bit of red. Right now it's even Stevens. Titan and Z are amongst the top losers. Titan has now shaved off almost 7.5% from the recent highs that it clocked in. Despite good numbers, there is some pressure on select auto names like M&M as well as Eicher Motors in the session today. On the flip side, it's pharma and to an extent OMCs which have done well. So DRL has done reasonably okay for itself. Actually, not too much aside of DRL within the pharma packs, and pharma has cooled off a little bit. And OMCs too, BP and HP are there. IOC is just about lying dormant as well. Some gains for State Bank of India in the session, and Ultratech Cement bouncing back a little. Remember, cement has been battered the last few days. In today's session, just bouncing up a little bit from the lows of the day today. Very quickly, some mid caps that I want to highlight before I hand it over to Navneet for the liquid universe, because the mid cap and the small cap and the gains or the losses are more pronounced. You will see Sun TV right up there from amongst the mid cap names, which has done extremely well. There's Oberoi Real Estate, which has gained. Edelweiss Financial Services is doing reasonably okay. So these 3 or 4 mid cap names which are doing okay for themselves. And on the flip side, we just look at the losers and the set of names out there. PC Jewelers continues to grind lower. Tata Global Beverages has been one standout loser today, 11%. For a stock which is just starting to make its way back, so about 250 or thereabouts. Not the happiest of grounds for Tata Global. Reliance Power to about 5.5%. A lot of these ADAG group names today are under pressure.
That's right, Neeraj. In fact, from the word go in the morning, we saw something like Reliance Naval tumbling nearly 10 to 11%. But looking at the futures and options market, we're off the day's high mark. In fact, Nifty is now trading below the 10,800 mark, which it reclaimed in Friday's session. Nifty down almost 21 points. Let's just pull up Bank Nifty as well and check what's happening there, because the PSU banking lot is giving some bit of support, so it slipped into red, but right now back into the green territory with gains of 15 points. I want to pull up the futures of both. The Bank Nifty futures have once again slipped into discount of almost 1 to 3 points, so watch out for that. No major build up actually seen. And look at the Nifty futures, open interest mildly lower. We are heading into a very important event tomorrow where the Karnataka election verdict comes out, so maybe ahead of that the traders will be wary to carry over their positions. And ahead of that verdict, definitely the volatility seems to be on the higher side. If you could just pull up the India VIX, which corrected on Friday's trade, is back trading around those levels of 14.3 with gains of almost 2.5%. What's happening on the option side then? If you look at the call strikes, 10,800 as well as the 10,900 strikes have seen some bit of addition. 2.3 lakh shares for 10,800 and the 10,900. Out of the money call strike has seen addition of 3.5 lakh shares. More addition so far has come in on the put side. Remember, the Nifty PCR went up in Friday's trade as well. So something like 10,700 adding 5 lakh shares, and also 10,800 has added around 4 lakh shares. But a lot of these strikes have also seen unwinding. So mind you, like 10,400, 600, they have seen a bit of profit booking maybe coming in today's trading session. 2 stock futures. Neeraj has already spoken about those stocks. Let me tell you what's happening on the futures side. Sun TV, The stock's gone up on very, very high volumes in the cash side, so definitely watch out for the delivery data here. And obviously we know the reason why the stock's gone up on good set of numbers, but the traders have been betting on the long side, 23% higher when it comes to the OI edition only in today's trade, and the futures are also trading at a premium of almost 5 rupees. The other one is Tata Global Beverages. The numbers disappointed. The margins this quarter were in single digits of almost 8.6%. There has been some short build-up seen as even the activity on the cash side, the stock's fallen on very, very high volume. So huge amount of shorting seen for Tata Global May futures as the open interest rises by almost 28 or 29%.
Yeah, this one, a very interesting move today. 11% off, and remember it was weak in, I think, in Friday's session as well. So it's not been the last good couple of days for Tata Global Beverages. Okay, let's get in a global voice. It's Monday, and that time of the week when we get you in touch with a renowned global voice, Michael Ingram, Chief Market Strategist at WHIreland Wealth Management, is joining us right now on the show with his thoughts on what's happening with the markets across the world and not just India. Mike, good having you. Thanks so much for joining in. Would it be fair to assume, just looking at the way the markets have been behaving the last few days or weeks, that there seems to be a bit of a return to risk in traders and investors worldwide? I mean, select pockets would be weak, but by and large, there seems to be a return to risk.
Yes, indeed. We're not quite to where we were in December, January of this year, but certainly if you look at various indicators of market risk seeking, we have seen a high degree of normalization, shall we say. So, for instance, if you look at implied volatility on a cross-asset basis, a lot of these indicators, such as the VIX, the MOVE index, implied volatilities on credit, etc., those have tracked down fairly steadily over the last month and a half or so. If you look at, for instance, the skew in options market, there also seems to be much less of a desire to seek downside protection, and that is something that absolutely saw during February and March. So, looking at it from a top-down perspective, yes, it does seem that though there's more risk-seeking in markets, and of course that's coincided with a general recovery in risk assets, particularly equity. I'd have to say, though, that to some extent the emerging market equities haven't joined that party.
Hi, Mike. Good afternoon to you from India. You mentioned about emerging market baskets, and actually let's talk about the global market first, especially the US market, which has been strong. We've seen the unemployment data that came in at multi-year low recently, and also the whole talk about more rate hikes coming in from Fed, which would mean money moving more towards developed market like US. Is that the only reason why emerging markets are not performing well, or there are some other reasons as well?
Well, yeah, I mean, I think that obviously you've seen a strong performance from the US. To a large extent, that's an earnings story. It's been helped by a tailwind from the tax cuts enacted the end of last year, but we're still seeing S&P 500 putting in a decent beat during the current earnings season. I think there's a general tightening of dollar liquidity. It's been ongoing, actually predates the market shakeup in this year, and I think it has been exacerbated to some extent by rising expectations of Fed rate hikes. You know, for instance, if you dig down into some of the minutiae of emerging markets, then yes, I mean the growth story top down seems to be intact. GDP forecasts are intact. EPS, earnings per share forecasts in aggregate are continue to creep up. But if you look at some of the emerging market credit numbers, particularly at the higher risk end of the spectrum, and obviously we've had a blow up in Argentina very recently, then you know you can see where perhaps the headwind is for emerging market risk assets. So although we've seen this return to risk seeking over the last few weeks, although we've seen many developed market equities do rather well, because of this credit channel, this tightening of dollar liquidity, we have seen to some extent emerging markets lag that recovery.
Interesting. I've seen your notes, Mike, and you seem to be finding the momentum much lower in countries or markets like India and South Africa. What's the view on India? Because Indian markets have, in a manner of speaking, climbed the walls of worry thus far, while funds have been moving out because the domestic flows are very, very strong here.
Yeah, well, I mean, I think that's part of the answer, actually. I mean, you know, India is a very, very liquid domestic market, and, you know, I'd have to say that generally speaking, you know, nobody at the moment has a problem with the growth story. I think in India, I think it's very, very strong. There is visibility to that macro growth story. I think the issue quite often is that translates into quite a challenging valuation. You know, so a lot is already in the price, and one would have to say that, you know, a lot of the valuation built into that is driven by some of the more local contingent, shall we say, who tend to sort of like pitch the earnings very high, and then of course they have to walk that back to some extent during the course of the year. And we're generally in a very challenging environment where multiple expansion is quite difficult. You know, so you know, when you're starting off from a high level, you know, where do you go from there? So I think, you know, it's a combination of top down and bottom up factors which may have something to explain. And of course, you know, a part of the issue is that you know India has been a popular market also internationally. Emerging markets have been a key overweight by most cash equity investors. So again, there might be some certain amount of rebalancing going on in this tighter dollar liquidity environment.
So where is the money moving actually within the EM basket? We've been interacting with a lot of experts who've also highlighted obviously the valuation concern that you just said. Multiples have been expanding, but we've not seen that sort of earnings growth coming about. In the EM basket, Mike, where is the money moving? Is it going to China or some other country?
I think a lot of it's going to China. I think you know, there are, if you look at the big markets where you can put a meaningful asset allocation, you know, there are you know, quite a lot of the rest of it is problematic. So Russia's obviously got sanctions. Yes, from a again bottom up perspective, you know, high weighting in energy, high weighting in materials. These are certainly the favoured exposures internationally at the moment. And of course, you know, there's they're effectively hedged emerging market earnings. These are dollar earnings to a large extent. So there's that. But as I said, sanctions, you know, Brazil, obviously the macro situation isn't necessarily looking that great, and you've seen the real coming under some significant pressure. So to some extent, you know, you start to tick some of these boxes off, and you just go, well, actually, China's probably the only one really where you could make a meaningful asset allocation. And I think to some extent you're seeing that.
Interesting. Interesting there. Okay, Mike, one question would be on this. I know you mentioned it briefly in, I think, your opening statement, but this strength in the dollar that we're seeing, quite contrary to what used to happen in the past, is not unnerving investors. Maybe, I mean, at least I'm looking with a narrow prism of what's happening in India, and maybe because India has these local flows is why we're not feeling the pinch of the dollar strength or the flows outflows. But because you look at the other markets too, is the stronger dollar ceasing to be a big impact on emerging market sentiment and performance? Or do you think while it is not showing right now, it will start showing up very, very soon if the dollar were to strengthen further from where it is right now?
Yeah, well, I think I've described it as a headwind for emerging markets, and not all, you know, not equally. Certainly, it's the dollar doesn't play the same role in emerging markets that it did pre-Asian crisis in the 1990s. You know, we have generally floating exchange rate. There's much more local currency debt out there, both at the sovereign and the corporate level. Of course, there is the issue that certain markets still, you know, that is still very much an issue. And you know, one of the markets, for instance, that always crops up in conversation is Turkey, where there is a lot of foreign currency debt still at the corporate level. And of course, that's a country which, after the taper tantrum 2013, hasn't really corrected its structural current account deficit. Unlike India, I mean, you know, both countries had current account deficits going into that episode of 5 to 6% of GDP. Well, you know, in Turkey it's still that level. In India it's 2%, so roughly. So yeah, I mean, as I say, I think it's a headwind, but I think it's not even. But you know, the Fed is aware of this. I mean, you know, Jerome Powell gave a speech only a week ago where he was saying, well, I think basically emerging markets can cope with the tightening of Fed Reserve policy, but just because they can cope with it doesn't mean that it's not having an effect on them. It's certainly creating a headwind. It's meaning that some central banks, which would otherwise like to have cut rates, I think Brazil is probably one of them, aren't in a position to do so. And in some other countries, such as certainly Turkey, where monetary policy is already very, very loose, it is becoming even more urgent for them to tighten it. Of course, in Turkey's case, the wrong end of the electoral cycle.
Mike, if I were to sum up this conversation, will it be right to say that this is the year which is going to be all about volatility so far that we've witnessed, also some headwinds arising out of US because of the rate hike? Therefore, developed markets could outperform the emerging markets for 2018?
I think it's possible. I mean, I think certainly the level of volatility overall is going to be higher. I certainly can't see it returning to the levels that we saw in Q4 of last year. And I think, the market is structurally set up to have these occasional panic attacks and, these periods of market dislocation. But those throw up opportunities as well. It's quite often that emerging markets suffer disproportionately in those kind of episodes. And as I mentioned right at the very start of this program, the fundamentals actually are overall pretty strong in emerging markets. So those could well end up being buying opportunities.
Okay, Mike, we'll leave it at that note. Appreciate you joining us today and taking us through your views on the world markets. Okay, moving away from global markets and looking at the cement pact, rising construction activity has actually helped the cement companies hike prices for the second straight month in May. But the quantum is not uniform across the country. Nikki Mirchandani, who's gone through a dealer survey conducted by Kotak Institutional Equities, is here with the fine print of that. Nikki, over to you.
Thanks, Navneet. Well, cement prices, as you just mentioned, had continued to see a recovery for second consecutive month after seeing a sharp price cut for the month of March to the tune of ₹9 per bag. Cement prices continue to recover. We've seen a price hike of ₹5 each, both for the month of April as well as May. Notably, however, if you look at the levels, surprisingly, they're not still to the levels that we've seen back in May 2017. Currently, at May 2018, as you can see, right towards the end, it stands at $331 per bag as compared to nearly $349 per bag that we've seen in May 2017. Now, the price hike has been more pronounced in southern as well as the western region. I'm going to talk about the southern region first, where the price hike is for the second consecutive month and also the sharpest that we have seen almost since March now, after seeing a sharp drop of ₹17 per bag in March. For the month of April as well as May, the prices have been hiked, pretty much offsetting the kind of weaknesses that we've seen in the month of March. Also, if you look at the across the region trend in particularly south, you would see Andhra Pradesh has seen an uptick in the prices out there. You've seen Telangana coming in with a price hike, and also, however, Karnataka and Kerala have seen a downtick, because of which you're seeing some kind of muted impact of the price hike. Second in the list, we have western region, where the price hike is the sharpest that we've seen across the region, and also the sharpest that we've seen in a year now on monthly basis for this region. ₹14 per bag hike, ₹8 per bag hike is what we've seen in April and May after the kind of slide we've seen in March. Now, if you look at the price trend for the western region, it has been across the board there. Goa, you've seen the price hike going. You also see a price hike coming in from Gujarat and Maharashtra, although there is a modest price hike of ₹8. However, in the two other regions, that is the central as well as the northern region, the prices remain pretty much depressed. We are not seeing any kind of uptick coming in for the central region, which for third consecutive month now, prices have been falling for this region after the kind of hike that we've seen for ₹7 in the month of Feb for this region. Now, if you look at the northern region, there the pricing trend is extremely depressed. If you look at the kind of pricing trend that we've seen from Jan onwards, that's the start of this year, till May, you would see a slide. Only when December 2017 is when the region actually took a price hike. We spoke to the former president of Bombay Dealer Association, Sanjiv Ladiwala. He said, it's not surprising, this kind of price hike. In fact, he says that, this price hike should have been coming through Jan to May, but we're just seeing it from the month of April and May, which is comparatively less as compared to what usually the busy season sudden witnesses. This is on account of the volume push mostly that the players, are undergoing right now. They're pushing in quantities in the markets, which in turn is weighing on the prices of this particular players or for the matter industry.
Okay, Nikki, thanks for that, for bringing that update on the cement pack. While the prices could be moving higher, but if you look at stocks like ACC Ambuja, they've been touching their fresh 52-week low in today's session. ACC is down almost 1% in trade. You've also got Ambuja, which has been actually hammered post its numbers, I would call it. On YTD basis, now this counter is down 20%. Just to remind our viewers, the volume growth from majority of these players, Ultratech, Ambuja, ACC, was pretty much strong. And there were some headwinds related to cost pressures too, which was seen in the quarter gone by because of the import duty that was levied on pet coke. But despite of that, they tried to mitigate those pressures. But specifically for ACC Ambuja, there are some selling pressure which have been seen. In fact, if you look at the Bloomberg terminal, Ambuja has the highest number of sell rating among its large cap peers. So almost 11 brokerages have a sell call on Ambuja, 8 have a sell call on ACC, while Ultratech and Sri Cement, 7 to 8 brokers have a sell call on these stocks. That's about the cement pack. Let's move on and talk about Sun TV, which is the stock of the day that's surging in trade and it's gained the most actually in 3 months after it reported a very strong quarter 4 performance. The management also shared bullish commentary in its conference call. Neeraj, what were some of the highlights of that conference call?
Yeah, well, very interesting trends, Navneet. Just to put the trade picture into perspective before I go to the con call highlights, just look at 2 things, and we'll revisit this, of course. But look at the volumes today, substantially higher than what the average volumes are. The blue line is the average volume. This white line is what the normal uptick in the volumes today is. And then look at this. It doesn't trade at any premiums. In fact, trades at a substantial discount to the peers, ZTV noticeably, and most people have a buy call. We'll get in the ANR function in a bit as well. But now, coming to the crux of the matter, what Navneet mentioned, the con call details. Here's why I think the street would have been more bullish on Sun TV in the session today. They mentioned a few things. Firstly, they mentioned that incremental subscription revenues from digitization in Tamil Nadu, incremental, not subscription revenues, but incremental subscription revenues in Tamil Nadu may cross 300 crores, and the domestic subscription revenue may rise by 20 to 25%. That's not a small thing. Subscription revenues moving up is a great factor for companies, that's the added stream in addition to advertising. Their IPL business might turn profitable. They actually said in the con call that it is turning profitable, which is also fairly good. And the point being, these are the margin drivers, that the IPL business might turn profitable, and the rising mix of subscription revenue, as I was saying, might actually aid the margin profile as well going ahead. And they've of course mentioned that they will foray into one more regional market in 2019. So these are the FY19 plans. So out of the multitude of factors that they would have spoken for the quarter gone by, for FY19, the pockets they have mentioned is fairly strong. Now, these are the average multiples that a couple of brokerages, noticeably Edelweiss and Motilal Oswal, have. They say that it's trading at about 24 times and 21 times FY19, FY20 EPS, which before the trade today, I mean, it's gone up about 10-11%, but before trade today, the stock was about 30 to 35% discount to Z before the rally today. Now that there has been a rally that has happened, that discount would have narrowed down a bit, but not too much. And that's why the question that comes into play is that with a PAT CAGR of 20-21% that they are talking about, the revenue CAGR of 20-25%, a margin uptick that is coming in, should such a large discount on Sun TV exist with a clutch of other things that are happening for the stock, why should such a large discount for Sun TV compared to Z exist? And that's the question I think a few people would have posed when it comes to Sun TV. Now, if I can just get the GD factor and show you the volumes in the session today, and just click on this and show you how the volumes have gone up today. Big surge in volumes from the start of the trading day today. Mind you, it's not a gradual rise. From the beginning of the session today, the volumes have been very, very high. So that is one factor. And if you bring the ANR or the analyst recommendations, I've already shown you about 21 analysts have a buy call there, very few sell calls. But just look at this. The return potential even after this is about 17%. The average target, the last price was of course 955. The 12-month average target price is 1118. So if you bought the stock today early morning when it was 905, 910 or 915, then the return potential would have been even higher. But even from these prices at 955, it's about a 17% return potential. Probably just goes to explain why the stock is just so rock solid. in the session today. It's gone up and it stayed up. No signs of coming down today, Navneet.
Thanks a lot, Neeraj, for that. And clearly, Sun TV is having a great session today. It's trading, it's been going up on very high volumes on the cash side. So that's a positive sign. Do watch out for the delivery data here. 10% higher, 955. I think 52-week high, all-time high, somewhere about 1,060 for this one. Well, talking about the earnings, it's been a strong March quarter for VST Tillers with a 25% jump in their top line. What have been the key factors at play this time around in their earnings? Let's get more details going and ask the management. Joining us now on the phone line is the Chief Executive Officer, Mr. K.U. Subaya, who joins us on the show now. Hi, sir. Good afternoon to you. And congratulations on good set of numbers. I see good volume growth for both tillers as well as the tractor space for fourth quarter. If you could tell us, how are the realizations for both these segments during the fourth quarter?
Realizations has been pretty good because of the volumes. The fixed cost absorptions have been better.
So is that trend going to continue? What sort of volume growth can we expect on the tractor side for FY19?
So the industry is projecting 10 to 15% growth in tractor volumes, and we expect similar growth as well. And as far as tillers are concerned, with the prediction of normal monsoon, we believe that 2018-19 also should pan out to be a better year than 2016-17. We expect at least 5 to 7% growth in volumes in tillers.
Interesting. Mr. Subaya, good afternoon, and of course, congratulations on a good quarter. Would you have hope for more realizations? The street was working with realizations being slightly better than what you've clocked in.
Yeah, if the commodity price increase pressure was not there, probably our realizations would have been slightly better.
And okay, so you're saying that realizations continue to be in the same vein as they were in the current quarter as well?
No, in 2018-19 we'll be under more pressure because the price increases, what was not passed on during the last year, to a certain extent we may have to pass on those price increases, commodity price increases to our suppliers.
So FY18 numbers definitely look good. I just want to get a check in the first quarter of FY19. How are the commodity costs panning out? Because I see in your numbers you've tried to curtail your expenses as well, which as a percentage of sales has definitely gone lower. If I look at the April sales number, your VST tiller tractors sales actually declined by 6%. Could you tell us what was the reason for the same? Because the announcement for monsoon has been normal.
Yeah, so if you look at our quarter four sales numbers, the growth was, the sales growth in case of tractors was almost 44% compared to last year and over 30% in tillers compared to last year. And most of the sales, majority of the sales happened in the month of March, with which our receivables was all-time high. So we wanted to moderate our working capital, reduce the receivables, and also have a fair check on our dealer stocks. And that is why in April you see that our sales numbers to the primary market was a little lower. However, we did not compromise on our sales in the secondary market.
Okay, so you're suggesting May and June will be better than April?
Yes, it will be better than April, yes.
Okay. Tell us about your balance sheet picture, what sort of cash you're sitting on books, and I also see you've declared a very healthy dividend for your shareholders.
I'm afraid I don't have those numbers there, but as it looks like our balance sheet still remains strong, but because of the increased dividend outflow, probably the reserves into the cash during this year might be slightly lower.
Mr. Subaya, you did mention that employee cost control or overall expense control helped you. It certainly was evident in the EBITDA margins as well. Would that be a constant feature? And part two of my question connected would be, I heard you mention that you will pass on some of the uptick in commodity costs to your customers in order to safeguard realizations, though we might see some impact there. All of this put together, what would be an average estimate for EBITDA margins for FY19?
It's very difficult to project it right now, being the first month of the year. But all I can say is our employee costs will be under control. We'll play it as depending on the sales. And as far as the commodity price increase are concerned, we will have to go by what the market is going through and what other manufacturers also doing. And if everybody is able to pass on the price increases to the customers, it's well and good for the industry.
Okay. So, and just before I get to that question once again, this slightly lower tax rate in Q4 versus normal, was there an aberration, or do we now get used to a 30% tax rate?
I think this will be the normal tax rate going forward.
So about 30-odd%. Because
yeah.
I think the usual was 33, if I'm not wrong.
Yeah, it's about 33, yeah.
Okay, so you've come off a bit as well. Okay,
yeah.
One last question, although in part you responded to this already, but because some of the larger peers have taken price hikes and meaningful ones at that, would you tend to do that? That is one, immediately if you've not done it already. If the demand, because of a normal monsoon, is good, would you be in a position to hike rates even more, hike prices even more, which might help you in your operational performance?
We wouldn't do that because we don't want to also put pressure on our end customers. We would like to get a price increase what is meaningful and what is really justified.
What is meaningful and what is justified, Mr. Subaya?
Sorry?
So what is meaningful? I mean, I'm just wondering, the meaningful would be a factor of what the demand, supply and the cost pressures are.
As on today, the impact on material cost is about 2%. So we would aim for a similar number.
Okay. Leave us with the guidance, sir. You gave us a volume growth number, I believe, for FY19. Would you believe that a double-digit top-line growth is a near certainty for you as a company for FY19?
As it looks today, with the good monsoon and with a lot of these government schemes being announced and getting announced, we believe that a growth of over 10% is a possibility.
Okay. We'll leave it at that. Mr. Subaya, thank you so much for taking the time out and all the best for FY19.
Thank you so much.
That's the management of VST Tillers. Seemed to be a fairly decent quarter. It's turned out to be that. Bring up the markets. VST is up 1%. The markets are lying absolutely flat. Let's get in our experts on board to try and figure out how to approach a scenario like this. An hour of trade left today, and we'll probably start. You will probably have some of the early trends from Karnataka by the time trades begins tomorrow. Hemen Kapadia of KRChoksey Securities joins us right now on the show. I believe in a bit Sumeet Bagadia of Choice Broking. Okay, he's also with us. Gentlemen, both of you, good afternoon. Many thanks for joining in. Hemen, let me start off with you. Would you go out and trade an hour into Karnataka elections?
Very good afternoon, Neeraj. No.
Staying away.
Yeah, because
it's prudent, maybe.
Weird things happen. Frankly speaking, last week was one horse race in Bank Nifty, which is still fine. Nifty has overcome 10,783, which is also fine. VIX has started creeping up because of the election, which is also expected. But trade, no.
No.
I am a old-fashioned conservative guy, so I'd prefer not to, frankly speaking. I would normally have a strangle, which I've been saying last couple of weeks, but frankly speaking, event risk, I know it's a state election and blah blah blah, but the VIX has creeped up, so I don't think one can buy a straddle, so stay away.
Okay, I think it's better to stay safe, and Hemen has been doing that for a while now. Sumeet, what about you? Would you look to buy Nifty or Bank Nifty at current levels, keeping in mind tomorrow the election results will be out from the state of Karnataka?
Hi, good afternoon. Well, yes, we have been giving buy call from past couple of weeks, and still there is a possibility that we can see more upside from present levels. Looking at the chart, it seems that the upside move should continue, and on the higher side we can see levels of around 10,900 as an immediate target. Once the Nifty is able to break 10,900, then we will see extended rally. Overall, till the time 10,700 is not taken away on downside, for a trading perspective, one should initiate long positions at the current market price. If there is a small dip of correction from present levels of around 20 to 40 points, then that should be used as a buying opportunity, with the stop loss to be placed at 10,700 levels on lower side for the upside target of 10,880 and 10,900 levels in next 1 or 2 days. At the same time, Bank Nifty is also looking strong. I think one can initiate long positions in Bank Nifty at 26,400, 450 levels, with the stop loss to be placed at 26,100 levels on lower side for the upside target of 26,800, 26,900 levels.
Okay. You know, a lot of queries. Ashok Leyland, some queries for what Navneet does, which is tell us about the OI changes. All of that coming up a bit later on. First, the stock recommendations from our experts. Hemen, to you first. What are the stocks that you're recommending for the afternoon?
Neeraj, a couple of stocks. I like Grasim Industries. I think it's setting the stage for an upside breakout. Hasn't yet happened, but the indicators have turned positive. So, frankly speaking, anticipating an upside breakout. So buy in Grasim with a stop loss of 1070, target of 1130. And the second one, Neeraj, is a sell. I have a feeling that Mahindra & Mahindra has sort of peaked out for the time being. We have crossover sells on the daily charts. Indicators, I mean, the stock is overbought. We are just hanging on to the 851 level. So I think on a small bounce, the sell in Mahindra & Mahindra around 860, stop loss 875, target 830.
Okay, those are individual stock bets coming in from Hemen. Sumeet, in terms of individual stock ideas in trade, what are you recommending today?
There are two calls. One is on buy side and the other one is on sell side. For a buy side trade, I think one can initiate long positions in Tata Steel. Tata Steel is looking good. From here on, there is a possibility that we might see move till 640 levels. So for a trading perspective, one can initiate long positions in Tata Steel at the current market price, with a small stop loss to be placed at around 598 levels on lower side for the upside target of 640 levels in next couple of days. The second call is on ICICI Pru. ICICI Pru is looking weak. There is a possibility that we might see a fall till 420, 410 levels. For a trading perspective, one can initiate sell positions at the current market price. If there is a bounce back of around 3 to 4 points, then that should be used as a selling opportunity, with a stop loss to be placed at 455 levels on the higher side. For the downside, target of 421 levels, and if these levels are taken away, then we can see extended move till 410 levels in next couple of days.
Interesting. Okay. Some sell calls coming on ICICI Pru, some sell calls coming on the auto names as well. Autos have looked slightly wobbly today. Ashok Leyland is down about 3 or 4% if I'm not wrong. M&M a couple of percentage points down as well. I don't know if it's got to do with some bit of profit booking, some bit of nervousness ahead of this. Let's talk about all of that with Sanjiv Bhasin. He's Executive Vice President of Markets at IIFL, joins us right now on the show. Sanjiv, what's the hurry? If you want to make an investment decision or even a trade decision, why not wait till 10:30, 11 tomorrow? Let the volatility subside.
Yeah, hi. So, Neeraj, that is part of the course. Every event has its own volatility, and there is always the precursor that stay away, wait for the volatility. But the trader will do what he wants to do. And, despite weak rupee, high oil prices and weak bond yields, you are still sitting closer to 10,800. So I would say, if you wanted to be a trader, then 10,600 to 10,900 seems to be the range. And I don't see that breaking in the medium term. Ideally, I think the market will be of the opinion that whatever the news tomorrow, if the good news comes again, there will be a pop-up rally which can take you to maybe 10,950, 11,000, but again it will get sold into. And if it is a negative correlation on the election result, then you get a 200-point fall. So I think 10,600 to 10,900 is the range. The actual performance is that the underperformance of the mid cap is what is hurting people. That is where there are trading losses, and that's why people are more circumspect and pessimistic. And that is typical. Buy weakness, sell buy weakness and sell weakness and buy strength is the adage which is being played out, and that is evident that more stocks are making new lows despite the index being at 10,800.
Okay, that's a view coming in on the index. I just want to pull up the dairy stocks, Prabhat Dairy, Parag Milk, as well as Umang Dairy. All these three companies have seen substantial jump in terms of stock price movement. Parag up 10%, Umang is up 6.5%, and you've also got Prabhat, which has registered strong gains in today's session. Just want to remind our viewers, I think Parag had come out with its earnings on May 11th, and the numbers definitely looked pretty much strong. Sanjiv, if you track this space, how did you view the numbers from Parag, and what are you making of the stock movement that is being seen across the space today?
So, Navneet, for us, it's a stock called Hatson Agro, which takes the cake in this dairy products. and that continues to be one of our favored picks. Of course, we had a buy call more or less at 450 about 2 years back, and that has played out brilliantly. I think that stock is a pedigree stock, the management is good, and we see them being one of the better lead players in the dairy products. I think Prabhat, Quality, all these are, but you know, we want to stay focused. For us, Nestle has been an outperformer all the way from 6,700, 7,072. Even today at 9,300, I can put my neck out and say Nestle can be headed toward 10,500 in the next year, 1 year. So by quality, Hudson Agro and Nestle is something which would be very comfortable in this dairy milk product.
Well, Nestle definitely seems to be a safer bet, and let's not forget the numbers were quite strong from Nestle, and we've seen slew of brokerages increasing target price there. And interestingly, Neeraj, I'm just looking at the investor presentation for Parag. They say we are now an FMCG company, and they've been focusing, majority of these dairy companies have been focusing lots on the value-added products, I think, which has at least done well for Parag Milk Foods for this quarter. Sanjiv, what is not done well today is Tata Global Beverages. Not many brokers have a sell call on this one. I think there was a disappointment. Margins have come in single digit, and Street clearly doesn't like that. The stock's down nearly 10.5% in today's session. If you have any coverage, would you go ahead and take a bet at lower levels in Tata Global Beverages?
Yeah, so yes, Navneet, the numbers are covered by us, and we thought that was a big disappointment. Also, there is now talk of Nestle buying the franchise or the sales of, you know, they're packed with Starbucks, which could impact Tata Global in the medium term. We'll have to look deeper into it. Thirdly, I think they are launching new products, which would mean that the bottom line could take a hit for at least another quarter or maybe 2 quarters. However, the only caveat is Himalaya, the water brand, is going to be very, very sought after in this extreme summer which we are going to see, and that could be the savior. So the risk reward at 255, 260 seems fairly okay if you have a slightly longer term view. But like I warned, the only caveat here is what would be the impact of Nestle's play with Starbucks, and whether that will impact the Indian business or not.
If it were to, won't it impact positively?
Yeah, even I thought, but Neeraj, we'll have to dig into it, whether you know, the chain of Starbucks, what would be the impact on that vis-a-vis Tata Global and so on. So I've not done too much of reading into that, but that was one other point of concern which may have arisen because of the weak results, and I'll have to wait for the language from the management as to why such low margins. However, like I pointed out, I think they are expanding their brand, and that could have been one of the key reasons. But you know, we'll have to wait deeper, dig deeper into the numbers to know more.
You know, I just fear, I hope that that's not the case. For the longest time, Tata Global Beverages used to be this company that failed to cross that 151 mark or 150 mark. Used to perennially get beaten down once it crossed 155, 160, all the way back to 120. After a really long time, it managed to cross those levels and then march on to some gains. I hope it doesn't fall into the trap yet again, wherein 300 is that barrier that it just fails to cross. Sanjiv, one company that came out with a commentary, and a fairly decent commentary, was Titan. The numbers may be a bit of a hit and a miss in certain pockets, but the commentary was very robust, has been really bashed up post its numbers, 922, 923, 50p for a company that is going to, in its own words, clock in 20% growth for the next 5 years. Worth paying that premium, you think, or not quite?
Yeah, so Neeraj, I think that has been one of the huge outperformers in this market, all the way from 450. I've seen it go in the less than a year to 900, 1,000 rupees. And I think there is inherent weakness in that, more to do with you know, the fiasco of PC Jewelers and other jewelry players, and people are being very, very cautious on that. Now, you know, Titan is a separate fish in that whole pond, and I continue to think that it can be a, you know, still a much better sought after name. However, I think it's routine profit booking and you know, maybe the valuation correction, like you said, 50 times is an expensive stock. But you know, in consumption, we've seen only re-rating on the upside, except one Tata Global. And I think that maybe it plateaus around this 900, 920. But closer to 900, it would again merit a relook. And we think that 1000 levels could be here by the end of the year.
If I can actually first take a chart check with you, then I do want to talk about Ashok Leyland. But chart check on Titan.
If you're talking about Titan, Neeraj, I think lower top, lower bottom on the weekly chart. Negative divergence by the MACD is the beginning of the week, so I won't consider the crossover sell as valid. If this happens on a Friday, fine. It looks, frankly speaking, more like a short. It's tired. We've had a phenomenal run up. Timely, if we've taken a breather. Is it a big breather? I don't know, but definitely 1000 yen coming back in a hurry.
Not coming back in a hurry, okay. Sanjiv, today the auto pack seems to have taken a bit of a backseat. Ashok Leyland in particular, there are some queries as well regards that. Seeing M&M2 has given up some bit of gains today. Anything peculiar within auto?
No, I think Neeraj's routine profit booking, some sort of Ashok Leyland has been a star. Yeah, you are right. It's down 4%, which is quite uncanny, because this stock has been on an uptrend and it refused to fall. But I think it's routine profit booking. We know their bus and the whole CV cycle is doing extremely well. We've seen strong numbers from Tata Motors on that also. Even though the stock is very it's not reacting to any number because of the weakness expected because of JLR's plateauing number. So I would say routine, markets are looking tired of any ideas, and they are bereft of any bigger moves. So I think across the board there is evening out on some of the auto names also, and I would attribute that to more of tiredness before the event rather than any major sell-off.
Okay, that's the view coming in on the auto pack, and also there are a couple of stocks that are moving on back of numbers for the likes of Saregama. But as of now, let's cut across now to the Banking Secretary's briefing on the CBI's first charge sheet in the Nirav Modi fraud case. Listen.
The concern and the resolve which government has in terms of the responsibility at the senior level in the management. You all have been wondering and asking as to what happened when the PNB scam happened. So I'll just try and put you the entire plot together so that you can see the entire picture. Today, the agencies have filed cases, the charge sheet, and before this, around 10 days back, we have generally whomsoever they are there. So, but we have in our turn, around 10 days before, have asked for explanation from the two EDs in the Punjab National Bank and the current MD in the Allahabad Bank. This was essentially because of the fact that when the SWIFT and CBS integration was to take place, those circulars came in 2016. There had to be a rigor. These are the serious things, and you remember, and you are aware that this is the duty of the senior management to see that risks are minimized in the system. So we have issued that notice and explanation 10 days back, and as you would see, that charge sheet has been filed today. So today we have directed our directors in the board of PNB and in the Allahabad Bank to put a resolution in the board to say that the concerned EDs and concerned MDs should be divested of all powers straight away.
So then PNB and Allahabad Bank.
Allahabad Bank. So we have issued a letter formal to our directors in the board. And since this is in the domain of the board to decide, the boards will take a appropriate decision on this. But this is the government resolve. Ki strict action against those who are found wanting in any sense in the senior management is taken straight away. There is no time gap. There is no lag. This shows the resolve to deal with these cases straight away. Right. So for the removal and for the dismissal, there is a set procedure. One notice and explanation was issued around 10 days back. The government about the removal and about the disciplinary action under the Section 8. This process will also start.
So sorry, sir, come again. What is
Section 8 of the Nationalized Banks Scheme. Section 8 defines that how do you ensure the removal. These are all contract level appointments. We have initiated the process for that also, because these are contract appointments.
These are
so this is the clear message
action initiative
that we have to be responsible for what we do, and we will only do action whenever there is a substantial proof, not that one can start on rumors or something. So we gave sufficient time to understand, to investigate who is responsible, who is not responsible, whose fault, how much fault, and thereafter the day we came to know that this is what it is, the action initiates on the same day. That's the resolve. And I would like to say here, all these actions are the senior level top management. As far as these cases and the NPAs and other things are concerned, I would like to make it specific that we have a whole lot of branches all over the country, in the districts, in the MOFO sales, in the smaller areas. These big NPAs, corporate loans, have nothing to do with those branches. So they're in the small branches, 2 persons, 3 persons are working. So these fellows are working very sincerely and honestly. So it's only whenever there is a proof that that strong action will be taken.
So one question if I may ask here. Sir, this is basically saying that DFS is now handling part of the investigation also, or you're acting after the reports have come?
We have found our initial assessment around 7, 8, 10 days back that there are some lapses. So we just ask a explanation. And today, after it is confirmed that there is a substantive problem, then only we have initiated the action.
Sir, just one more. And just one more thing, sir. What kind of reasoning was given by the current 2 MDs and the CMD of Allahabad Bank before the government took this step?
And sir, do you see this net widening right now?
And will
CMD and Allahabad, but you also spoke about Indian Bank and Syndicate Bank.
No.
Could you just clarify on that front also?
See,
only 2.
3.
Against only 4%, you have
3. Board level 3.
2 EDs of PNB
and 1 MD and Allahabad 1 MD. So Allahabad MD.
So जो आप अभी हिंदी में जानना चाह रहे थे, गवर्नमेंट का भावना रिजॉल्व और उसका निश्चय बिल्कुल स्पष्ट है कि जहां भी कहीं क्लीन प्रोसेस से थोड़ा सा
That's important, and the implicated EDs and MDs are to be divested of all powers immediately. That's an important news flash that has come out from this DFS secretary briefing as well. The stocks have already shown their hand. You see the stocks being pummeled out of shape the last few days, and today's been no different. Companies like Dena Bank, etc., are down. Allahabad Bank 3.5%, Dena Bank about 7% as well. So 17 odd rupees is where that is trading at. There is a fair bit of pressure on some of these names. I think the point that Sanjiv Bhasin was trying to make, that a lot of these beaten down names, are so many stocks while the market is at 10,800, are trading close to 52-week lows as well. Okay, before we get in some chart checks going, one final thought from Sanjiv Bhasin as well. Sanjiv, you know, I was just looking at stocks which are either trading at new highs or otherwise. Now, while Nestle is something that we already discussed, the top of the list today is HDFC Life. We've gotten some sell calls on ICICI approved today. HDFC Life is trading at new highs. They're expensive, and the and the more premium ones keep on attracting more funds. Between these three, for somebody who's listening to this conversation right now and wants to invest into one insurance company out of the 3 or 4, as the case may be, what would you do? What would you recommend?
So Neeraj, I think that whole insurance space is a very strong sector to be in for the next 2-3 years. You saw the biggest caveat on the budget was Modi ji's 5 lakh rupees per person as an insurance and on medical, and I think we are just at the tip of the iceberg as far as insurance goes. I see all these 3-4 behemoths doing extremely well, and if bond yields remain elevated because of crude, then you know, the proportion they have on fixed income will also be relatively more earner. So like you said, HDFC, ICICI Pru, SBI Life, these three stocks are I guess very good to be bought in, and they should be in your portfolio. Don't single out one. One of them may be trading at a slight premium to the other, but that depends on your timing. I would suggest all three to be bought in some proportion, and you could really do very well in the next 2 years on these three stocks.
So, yeah.
Okay, that's the view on the insurance space. Sanjiv, I think we'll leave it at that note. Appreciate you joining us today and taking us through your thoughts on the markets. Before we slip into a very quick break, just want to take one viewer query. Hemen, since you're with us, I'm taking one options query on KRChoksey. Somebody's bought 160 put strike, and that's Rajesh Nair, who writes to us on YouTube, and he's making good amount of money. He wants to know if he should book profits or hold on to his position.
Assumption is that if it's a single put, I think he should book profits. There is rock solid support at 152 Navneet. So I have a feeling that there's going to be support and a bounce back. So if it's one put, he needs to square off. If he's got multiple puts, he needs to book partial profits.
And do you see more correction? Because one more viewer, Ravi Shankar, wants to know if there can be more fall expected for this one, because this is one of the outperformance. I don't know if today's case can be attributed to profit booking, but if the stock has to fall more, what's the support?
152. 152 is crucial. I have a feeling, Navneet, we are down to 167.50. We'll take support at 150, give a dead cat bounce, not overcome 160. And then when it comes down and cracks 152, there'll be a problem. So I have a feeling 152 might not break at the first attempt. We've gone to 153.50 in cash market NSE today.
Okay, that's the view on KRChoksey. Keep watching the show. We'll try and take some more queries. It's time for us to slip into a short break here and countdown. But on the other side, we'll get you the Fab 4 stocks of the day at 3:15 p.m. We also tell you what the dealing rooms are recommending in trade and some closing strategies from our technical experts. Stay tuned.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge, साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
It doesn't matter who claims what, who has the loudest voice or the catchiest slogans. What matters is what the people decide.
Will Yediyurappa win the Lingayat vote?
Has Congress done enough to keep Bengaluru?
Or will Mysuru decide this cliffhanger?
Get ready for the deep dive, vote-wise, seat-wise.
So that the big picture is crystal clear.
From leading Karnataka to what is to unfold in 2019.
Counting day only on Bloomberg Quint.
Less than half an hour to go for the markets to close. Back with countdown right here on Bloomberg Quint. Bring up what the European markets are up to as well. Our markets are very flat. So I must say, even if Europe was starkly in the green, maybe our fortunes wouldn't have changed too much. But no, Europe too is trading very, very flat. So the world markets are taking it quiet on day one of this week. Now, before we move any further, want to mark a couple of names. Z Entertainment is down 2.5. Tata Motors, in line with some of the other auto names, is down about a couple of percentage points. Remember, Tamo, Mahindra & Mahindra, Eicher Motors, Ashok Leyland, all of these are down in the session. Keep that in mind. And then, my producer alerted me to the fact that it's a third straight day of losses for Rain Industries. And there have been deep gashes from the levels that it was trading at. It's now at 253. Sumeet Bagadia, if I can take a chart check, you can choose. Either give me a call on Tata Motors or give me a call on Rain Industries.
See, Tata Motors is not performing with other auto stocks. The way it has given a correction, the stock is overall weak. But looking at the chart, it seems that now this correction should hold, and from here on there can be a pullback rally in Tata Motors. Looking at the chart, the immediate support which I can see is at 320 or 300 levels. That means till the time these levels are not taken away, one should avoid selling Tata Motors at present levels. Those who have taken long positions, they can hold on the existing long positions. On higher side, stock has resistance at around 340, 345 levels. Once the stock is able to give breakout above 340, 345 levels, or a closing is seen above these levels, then there is a possibility that we might see a move till 380 or 400 levels in next couple of weeks. I think one can take a chance by taking long positions at 320, 325 levels for a pullback move till 340, 345 levels. Once the closing is seen above 340, 345 levels, then my conviction will increase for the targets of 380 and 400 levels in next couple of months. So overall, I think it's better to avoid short positions at present levels, and one can take a chance by taking long positions at current market price.
Okay, thanks for that, Sumeet. Let's now find out what are the Fab 4 stocks of the day and what's made it to Yash's list. And then we'll, of course, do the chart of the day as well. But firstly, to the Fab 4 stocks for the afternoon. Good afternoon, Yash. What made to your list?
Good afternoon, Neeraj. So first up, we have Vinati Organics. This one had reported an extremely good set of numbers. Their revenues are up 9% to 213 crores, while their net profit grew by as much as 26% on a year-on-year basis. But it's not just the numbers that look good, Neeraj. In fact, we spoke to the management and they are quite bullish in terms of the outlook for FY19. Firstly, they don't see the higher crude oil prices to impact their margins. They're seeing a strong demand traction in both ibuprofen and ATBS, where they expect volumes to grow at a rate of almost 30% in the current fiscal, and they are also targeting a bottom line growth of 35%. So that's what's working for this one. Jai Bharat Maruti, this one's up 4% today after the company announced that it has got into a joint venture with JBM Auto and Thailand's Ogihara company for the manufacturing of press stamping dies, and also NRB bearings. This one's up 10% today. A big bulk deal yesterday saw UBS Capital buy a little over 27 lakh shares, or about 2.8% stake in the company. And that apart, finally, we are also looking at Parag Milk Foods. This one's up 10% today. Don't know what's really making this one move, but we are seeing some significant volume action, almost 6 times the 20-day average. And the stock also hit an all-time high of 345.60 in today's day of trade. Back to you.
Well, Yash, it's the strong guidance, I guess, which is given by Parag Milk Foods post their numbers that is driving the entire space, I guess. They've given guidance of almost 3,000 crore of revenues for FY20. So watch out for that one. But moving on to the chart of the day, let's put spotlight on Jindal Stainless. The company is back in favor with analysts as a revival in steel demand that aids the company's performance going ahead. Nikki Mirchandani is here to tell us more details on that. Nikki, over to you.
Thank you, Navneet. Well, the turnaround path which has been embarked upon by Jindal Stainless makes the company a more preferred bet amongst the analyst community and, amongst also the carbon steel players that we're seeing. The stock is estimated to offer the highest return on equity for FY20 at 18.9 times, which is higher as compared to the other steel players like SAIL, Tata Steel, JSW Steel, and also JSPL. It trades as a significant look at the returns of 19%, which is higher also compared to Tata Steel and that of JSW Steel. However, the stock, which has actually outperformed for the calendar year 2017, all the other steel producers, is trading at a significant discount when it comes to the PE. Well, the price to equity for FY20 is estimated according to Bloomberg data and the Edelweiss data at 7.5 times as compared to nearly 8 and 12 times that we've seen. Now, the yellow bar, which represents the PE in times, it's lower as compared to what we can see for other players. Now, what makes the company an attractive bet? Well, this is a classic example of the turnaround story. Reducing debt levels, good operating performance that we've seen in FY18, combined with the robust outlook which comes in for stainless steel industry, is what makes the counter an attractive bet, is what Edelweiss in its initiation report said, which also suggests a 45% upside on this counter. Back to you guys.
Well, thanks for that, Nikki. So that's interesting. Edelweiss bullish, and a couple of other analysts too probably bullish on Jindal Stainless. A number of factors out there, a couple of them are linked to the valuations. One is that the PE is the lowest, and the return on equity, FY20 return on equity, is arguably the highest among some of the other steel companies: Jindal Stainless, SAIL, Tata Steel, JSW, and JSPL. Remember, arguably it's the smallest out of the lot as well. So maybe there is merit in it trading cheaper compared to some of the others. But Edelweiss as a house seems to be liking Jindal Stainless. What else? Just looking at stocks, not too many stocks trading at, as I said, as 52-week highs, but HDFC Life continues to march 3% higher and counting. Hemen, would you trade HDFC Life? If you had some large cash market trade positions into HDFC Life, say if you had, what do the charts indicate? Can it do more?
Well, yes and no. Yes, because it looks good. No, because I have 1, 2, 3, 4, 5. There's a 6 month of trades, Neeraj. So paucity of data. So I'm not sure if longer term technical view is valid. But whatever data we have has the basics right. You have the higher top, higher bottom scenario. It's quoting with the 55-day exponential moving average. Weekly MACD is the buy, monthly MACD is the buy. Stochastic has given a positive failure swing. This support at 485, 490. It looks good. Close above 545, further upside.
Interesting. So maybe not. Difficult to say that right now. Well, that's a stock at 52-week high. The number of stocks at 52-week low is just too large. I mean, almost all the sugar names out there, companies like Hindustan Construction Company, for example, right up there as well. So a clutch of these names are looking very, very wobbly right now in trade. BHEL, incidentally, down about 3.5% or 3.5% BHEL, and is trading at fresh 52-week lows for itself. Dharmesh Kant Johnson, he's independent market expert with us on the show. Dharmesh, thanks so much for joining in. Talking about stocks at 52-week highs, but a clutch of other names. Texmaco Rail, for example, for all the bullishness that people had around the railway companies, is trading at fresh lows, or 52-week lows at least. Hudco trading at 52-week lows. BHEL trading at 52-week lows. Leave out the sugar names. They've been talked about to death. What about some of the others?
Yeah, good afternoon. See, if you look at the market breadth, I mean, the entire 800 points of rally in Nifty from 10,000 to 10,800, out of the top 200 market cap stocks, almost 100 have traded in a negative territory. So 8% kind of an index rally, and you are having a profit taking happening in all the stocks. I mean, people exiting the stocks, which is more than 50% of the top 200 market cap, is not a good sign at all. So to me, this was more of a pullback rally which has been played out. If you look at the numbers, 60-70 companies which I track in the top 200 market cap very closely, the numbers were not very great. Around 10% kind of PAT growth was there, 12-13% EBITDA, and around 13-14% kind of a top line growth. So we are talking about 20% kind of a growth, because the market is trading at 23-24 times P multiple, and I'm very sure with this financial year, when it's the earnings end, Nifty earnings growth won't be more than 5 to 6%. So 450 is the level of EPS on Nifty which I'm looking at for FY18, and that translates into 23.5 times of trailing P multiple for Nifty as of now. And last 4-5 years, every year the scene has been 20% kind of a growth will come. Monsoons have been good for the last 2-3 years. It is again slated to be good this year around. But the traction is not there in the capital goods segment at all. And if you look at the PSU bank numbers, it's like disastrous. Every time you tend to build up a hope on the PSU bank numbers, but the numbers which they come out is howling 15-16% kind of a GNPA, and more or less 10% kind of a net NPA. So where there is a scope to lend to the economy. To my mind, stock specific in the consumption space can still be a play, but more or less it will be a narrower and narrower market in this year as we go forward, and one has to be very careful in picking up stocks. So it's more of a blanket, a volatility kind of a market with sell on rally kind of a bias. So one has to be very careful in stock picking. Consumption is the only play, but again, consumption you will have cyclicals. I mean, the cycles will play out. Sometimes it will be automobiles, sometimes it will be agri theme. As of now, you can see traction in agrochemical space like PI Industries, Tata Chemical, UPL. These are stocks which may gain traction just based on the news flow that monsoons are. There is an advancement of monsoons, or monsoons will be good, but nothing much, because even if you look at the numbers out there, the growth trajectory is only 10 to 12%, but we are pricing them at 20-22 kind of a P multiple. So it's a scary situation as of now.
Okay. Yeah, it is looking slightly wobbly, the market, but certainly has been terrible. I think the mid-cap and small cap indices this month have lost about 4.5% or 5% from the highs, from the highest level in the month of May. The benchmarks are trading at 10,800. This goes to show the difference. I mean, this is a 1 month chart, but if you just look at May chart, it's about 4.5% for the mid-cap space. However, it's 310. That time of the show when we tell you what could get into or get out of the F&O ban in the session tomorrow. Important days of trade, the next two, the last half an hour today and the next couple of hours at least, if not more, tomorrow. Anit, what does the list look like?
Well, I got 3 stocks on my list today, Neeraj. 2 stocks that are likely to enter into the F&O ban for tomorrow's trading session. One of them is JP Associates. I think that stock's also been under pressure. If you look at the total open interest as a percentage of market-wide position limit, as on Friday's close was 92.5%. And you can see the intraday chart. The stock's actually down almost at day's low with cuts of 8%. So for a stock to enter into the F&O ban, it has to breach that 95% mark. Looking at the data today on both the futures as well as couple of option strike, it looks like it is likely to breach the 95% mark. The other one is Just Dial. Do watch out for this one. That's also trading with cuts of almost 1%. There is some build-up seen on futures options. This is also likely to cross the 95% mark. One stock which may come out of the ban for tomorrow's session is Balrampur Chini. So definitely watch out for this one. 80.4. It was very, very close to actually coming out of the F&O ban. For a stock to come out, it has to breach the 80% mark, and the stock is currently at day's low with cuts of almost 2.5%, Neeraj.
Okay, watch out for 2 or 3 of these names. I wonder what will happen to Balrampur Chini though if it comes out of the ban. Could there be more shorts in place, because almost all the stocks are getting beaten down. Look at the volumes today on that stock, which is already down. And by the way, there are traders who send me messages about where sugar prices are. Today's message suggests that we are probably near the lowest prices that we've seen in a long, long time. So unless the prices recover, don't even think of going long on the sugar names. But it's time now to get you what dealing rooms are recommending in the session today as well. In moments from now, Darshan and Nathan would join in to talk about what dealers are saying in the session today as well. And that will be important just ahead of the election verdict coming in. I think will be very, very pertinent. Just want to mark though, just before I get in what dealing rooms are recommending in the session today, a couple of things. Stocks which are just starting to move up or down a bit because the index is well and truly in the green now. I think companies like NTPC, for example, just a bit of a spike from where it was. Similarly for an Asian Paints, just a bit of a spike, and Bajaj Finance a bit of a spike from where it was. So just some moves higher from where those stocks were trading at, coming about in the last few minutes of trade. At the broader end of the spectrum as well, Welspun India, Indiabulls Real Estate and JSW Steel are some of those names.
One more, Neeraj. I think Praj has gone up quite sharply in trade. If you could just pull up the intraday chart, Praj Industries, that's seen gains of almost 6 to 7% right now. No, that's Praj Industries we're talking about, not Parag Milk Foods. I think the numbers are likely to come out on 16th of May. So watch out for that one. It's crossed the 100 mark in today's session, Praj Industries Limited. The gains have just come in the last 15 or 20 minutes.
Do you want to comment on this one, Hemen, before we get to what dealing rooms are recommending? Praj Industries?
We spent, Neeraj, almost 19 trading sessions between 91 and 100, and we're, sorry, 100 and, the exact level is 101, yeah. So we're on the cusp of breaking out. Obviously, something has happened. In the sense, volume is 24 lakhs on the NSE cash market. We'll have to look at the delivery marking. Set for a breakout. Bad market, funny stocks move above 101 should do well.
Okay. Let's get a sense of what dealing rooms are recommending in the session today. Darshan and Yatin join in with their channel checks. Good afternoon, both of you. Yatin, let's start off with you first.
Well, Neeraj, we were talking about Indigo. That stock is showing some strength and buying seen at lower levels. And overall, aviation pack is looking at some bounce back, which is happening in trade today. So dealers are still positive on Indigo post the recent correction, which offer the opportunity to buy according to them. Also, watch out for Britannia. They will be reporting the quarterly numbers very, very shortly this week. Dealers indicate that on the basis of F&O trends, this is a BTST kind of a strategy. So dealers recommend a buy as far as Britannia is concerned from the FMCG pack ahead of the earnings. And KRChoksey, that stock is surprisingly down, 4.5%. Clearly, some intense selling pressure is there. Delivery-based selling seen there. Almost, 1.78 crore shares traded. So on heavy volume, the stock is down. Dealers indicate that FIs are said to be sellers in trade today. But Darshan has a few more stock to talk about from the dealing rooms.
Yeah, so Parag Milk pretty much is doing extremely well. It's up almost 9%. The management held, an analyst meet, and the guidance that they gave was extremely robust. They're looking at anywhere between 2,700 to 3,000 crores of top line in FY20 with high margins. So the commentary was good, and along with Parag Milk, most of the other milk or dairy companies have been doing well in today's trade. So that's the trigger why Parag Milk is doing well. The other one is South Indian Bank, which is up almost 3.5%. Some of the HNIs actually accumulated the counter post the financials that came out. They believe it's a turnaround quarter and the worst is over. So we'll closely watch out for South Indian Bank at this point of time. And the last stock that's been spoken about is Titan. Post the numbers, it hasn't, the numbers were extremely strong. The management commentary was extremely strong. But, the counter has been down ever since the numbers came out. Obviously, on one end, there is a lot of HNI and domestic fund selling that is happening. And on the other front, valuation concerns also come in because compared to the other jewelry company, Titan has been a marked outperformer. It's run up significantly. So valuations pretty much catching up with Titan according to some of the dealing rooms.
Thanks for that, Darshan. So clear case of some bit of profit booking, meaningful profit booking after the results came out. The numbers seem to be okay. Repeat question on the show today, but deservedly so. Dharmesh, would you go out and invest into a Titan? It's about, what, 8-9% off from the levels that it was at.
Not really. I think the valuations are still too high. Growth, I think 20-25% is the best scenario you can look at where Titan, clocks our growth for next 2 or 3 years. But any valuations above 50-60 kind of a PE multiple is not justifiable. As far as capture of market share is concerned, Titan does benefit because some of its listed peers have been doing horribly bad. So that allocation of fund would be there, sooner. Maybe sometime from here on, but to my mind, one should wait, for investing in Titan because it has seen a very stellar year last, and now let some more correction happens around about, if it trades below 50 kind of a PE multiple 1 year forward, I would still look forward to it, but not now.
Okay, Blue Star numbers are out, Navneet, and we're slightly ahead of our estimates, Bloomberg estimates. Let me qualify. but stock about a couple of percentage points lower in trade.
Here's the profits. I think they've come in at 51 versus 37, which was seen in the corresponding quarter of FY17. And sequentially also, I think at the bottom line has seen a good jump, 19 crore, but it's a seasonally strong quarter, let's not forget. Then the top line front, 1475 versus 1381. And the stock's seen a bit of recovery after the numbers, but there is some selling pressure which continues. It is still trading with cuts of almost 2%.
Interesting. Okay, 320. Let's get in closing strategies from our experts. Sumeet, Bagadia, I'll come to you first. If you had to trade one stock, if you're willing to do that today from a BTS or an STBT perspective, which one would that be?
I will select NTPC. NTPC is looking good. Today it has given a very good move from lower levels. There is a possibility that we might see a extended move till 178, 180 levels. I think for a trading perspective, those who have taken long positions in NTPC, they can hold on the existing long positions. And if anyone wants to initiate a fresh long at 170 or 172 levels, then they can go ahead and initiate the long positions with a stop loss to be placed at 167.50 levels on lower side for the upside target of 178, 180 levels in next couple of days.
Okay, that's a buy on NTPC. Hemen, what about you? Any BTST or STBT?
Yes,
choose to say that you don't want to enter into a trade today.
I'm sure you'll have stock-specific trades, no?
Yeah, I think probably it's either. Yeah, I think I'll do a STBT on Cummins.
STBT.
Yeah.
Okay. And standard 1% stop loss, 2% target price.
Yes.
Okay, that's interesting. The stock is just broken down. And that's a sell call. Cummins India 759 or 760 is where that is trading at. So Asian Paints has had a remarkable move the last couple of days, and that stock is up another % today. So good going for that one. There's strength in JSW Steel today. IndusInd Bank continues to rise and shine, and Nestle continues to rise and shine. So 3 or 4 names out there which are doing okay. PSU banks, remember guys, have been taken to the cleaners today. Everything from a Canara Bank to a Dena Bank to an Allahabad Bank. All of those stocks are reeling under selling pressure, and Reliance ADAG group names as well. Reliance Naval is down about 13.5. I think I saw a couple of other names too coming off. And then look at stocks like Rain Industries, etc., which are down. Rain Industries, Dharmesh, Kant, 9% down today. Earlier was down as well in trade in Friday's session. Thursday was a red day. So it's come off quite rapidly from the numbers and the levels and the valuations that it was trading at. What happened in the quarter? Was it an aberration, and can it rectify that, or would you be circumspect now?
See, basically the input cost has gone up for the Rain Industries in the quarter gone by, and that was reflected more or less in the numbers. But I do think, the company is good. It has a very robust business model, and going forward, as the construction activity picks up, so again they would be the huge supplier of their products will again be back into attraction. So volume growth will be there. Pricing power, as far as that is concerned, but that seems to will take a hit. Margins will get a contraction. But yeah, from a mid cap and a small cap portfolio perspective, one should be buying. One should have at least 3 to 5% kind of allocation in Rain Industries. So it's a good company to have post the correction which has happened, and some more correction which may likely happen, because I expect the market to correct a bit sharply. So that will have its rub-off effect on all the mid cap and small cap stocks.
That's a sharp correction seen for Rain Industries. It was down 17% on Friday as well, post its earnings. Dharmesh, before we let you go, the broader markets have been reeling under pressure since the past few days. Anything that you're monitoring from the broader market space that you would like to accumulate at lower levels?
Not really, Navreet. I am very skeptical on the markets, and I do think a sharp correction is round the corner. Post tomorrow, I mean, after the Karnataka election results announced, we'll like to have some breathing space before you get into the bottom market, because the earnings which have come out, still I don't find cherry picking as a conviction. I mean, conviction cherry picking is not there. So would like to give it time before one starts reinvesting. So Let it correct more 10-15%, then maybe some valuation comfort will be there. But on a macro basis, overall, it would again be cyclicals, consumption, infra, and metals, which are the areas, including auto ancillaries. These are the basic areas where I would be looking forward to, again, have my buy list ready.
Okay, Dharmesh, thank you so much for joining us today and taking us through your views on the markets. Well, clearly, he's of the view that earnings have once again disappointed. 450 is the EPS that he expects for FY18, which is going to be a growth of only 5% over FY17. But I just want to pull up Saregama. Remember, the numbers of this one also came out, and very, very strong set of numbers. The PAT was up nearly 5 times. The stock has come a little bit off day's high, but still holding on to gains, considering the broader markets are under pressure. Probably all these stocks which are inching up are seeing some bit of selling pressure. Hemen on the charts at 840. I remember last 1 year has been quite good for the stock. At current levels, would you advise taking any fresh bet, or let's say if somebody is already purchased it, they have it in their portfolio, what sort of levels that they should monitor?
I keep a progressive stop at 810790 Navneet. Currently what we are seeing 960, 640, we are seeing a retracement of this fall. If I were to look at the quarterly charts, I think we are very clearly in a longer term uptrend. Stock is probably going to be 4 figures down the line. But in a market like this, will it outperform standalone? I am not sure. I don't somehow see it taking out 920 in a hurry. But from a 2-year point of view, it's good. So shorter to medium term, I'd say better to be a bit light or at least protect your profits. If you have a very longer term view, I think it quantifies very clearly as a whole.
Okay. One last question, Sumeet, Bagadia, the PTC twins, both of them under pressure today. What do the charts suggest here? PTC India Financial Services.
Looking weak. Overall, if you look at the longer term time horizon chart, in any case, the stocks are looking weak. As far as PTC is concerned, I think one should avoid long positions, and in fact one can initiate sell positions at the current market price. Downside, there is a possibility that we might see a fall till 86 or 85 levels, and if by chance these levels are taken away, then we will see extended move till 80 levels also. At present, for the targets of 85-86 levels, one can initiate short positions, and those who have taken short positions, they can hold on their existing positions with the stop loss to be placed at 94 levels on high side. On the other side, PFS is also looking weak. The stock is weak on a longer term time horizon chart, and on downside there is a possibility that we might see stock moving till 18 or 16 levels in next couple of weeks.
Okay, PTC India, remember, was up last week almost 10 to 11%, so probably that could be a bout of profit booking. And just want to pull up Max Ventures and Industries just in the last 5 minutes of trade. That too has seen some momentum on the upside. It's trading with gains of almost 7%. But it's time to head across to Neeraj to find out how today's closing is panning out. And Neeraj, as flat as it can get ahead of the Karnataka election verdict tomorrow.
Yeah, I don't know who said this, but flat as a pancake. One of the cricket commentators, I've heard him say this. It is flat as a pancake, but not so much for the mid caps and the small caps. Those have corrected yet again. I'm not surprised that in fact it's gotten steeper as we speak. So the small cap index for the month now erodes over 5% in value. It's not a happy hunting ground for the mid caps and the small caps. They've really come off. The average, some of the cuts are as deep as 30% in the month of May alone. Okay, let's bring up what's happening to the indices. Now we will talk about what's happening in the mid caps and the small caps and the more liquid universe. NTPC about 2.5%, DRL, BPCL, Asian Paints. As you can see, not enough gainers. Some losers which are not heavyweights. So Titan, Z, Tata Motors, Mahindra and Mahindra. Autos have seen a bit of sell out today. Bharti Infra, India Bulls, Vedanta. But none of the heavyweights are there in the top losers list or on the gainers list. Maybe an SBI to an extent, maybe an Infosys, but those are very minor gains that have come in. So all in all, heavyweights have stayed out of action in the session today. It's been a fairly light day. I'd be surprised if the volumes have picked up too much too. But now, what about the broader end of the spectrum?
Well, Neeraj, there were some gainers on back of earnings, but definitely the broader markets have been reeling under pressure in the past few days. Let me start off with some gainers first. Sun TV today reacted quite positively to its earnings. The stock was up on very high volume, so definitely watch out for the delivery data here. Also, some fresh long positions were built up for this one. South Indian Bank came out with its numbers today, and the street gave gave a thumbs up. Actually, the stock reacted positively right after the numbers came in, and that closed around the gains of 3%. Parag Milk, well, this one came up with good guidance actually going ahead. They've done almost 1900 crore of revenues for FY18, and they've said by FY20 they'll be able to do almost 3000 crore. And not only Parag Milk, after that guidance which came in, you did see the other dairy stocks also perking up in trade. Sri Pushkar was quite active right from the word goes when the markets opened, as you can see in the intraday chart, 6.5% higher for this one. And Saregama once again stellar set of numbers on back of which the stock reacted positively, closing with gains of almost 5.5%. On the losing side, an outperformer, Ashok Leyland, is finally succumbed to some bit of profit booking pressure, and that was down almost 4% in today's session. PC Jewelers, which came out of the F&O ban for today's trade, once again fresh shorting was seen at those levels of 190 or 195, 11% lower for that one. Tata Global Beverages numbers were not good, single-digit margin this time around 8.8%, 10.6% lower for that one. And Newland Industries from the pharma pack was down. Once again, the numbers for this one was not so good. Rain Industries, the stock started falling after the numbers came in on Friday. It closed 17% lower on Friday. Today it was down another 9% on Friday. We also had BNP Paribas, which sold almost 0.6% stake in this one. And PTC India finally, which was up 10 to 11% last week, succumbed to some bit of profit booking pressure, which came in at a time when broader markets are reeling under pressure. So 8% lower for PTC India.
It looks slightly wobbly today, the PTC twins. Okay, so that's the picture at close. Not the happiest of close if you're a mid-cap and a small-cap investor. The large caps have done just about okay, but a flat day of close. The market breadth, of course, will tell you that the advanced decline was very adverse, and it only stayed that way for most part of the trading day. So 1:3 in favor of the declines. Not surprising, yes, the market breadth continues to look very, very wobbly. But two things. One is the contributors list, and you will see absence of heavyweights there. Any meaningful moves by heavyweights, there you can see hardly any moves there. The turnover, Navneet, I'm very interested in seeing if the participation has picked up or not today. I doubt it would have.
Not really. I'm sure the traders will be a little wary heading into an important event like tomorrow. So I think F&O turnover is way below what the average turnover we usually see of 5 to 5.5, and NSE cash is just about the same. Probably there was some unwinding also, which you could see, in some of the futures and options counters. I remember on Friday, the FI added a lot of bullish bets, so some bit of covering in today's trade ahead of a big event was likely. Maybe some bit of option buying also would have happened as protection today. Sure, yeah. Out of the numbers. Because the Bank Nifty futures and the Nifty futures, there was not much of build-up when it came to the open interest edition. But on the option side, especially for Bank Nifty, there was a lot of activity today. Yeah, had to be some bit of option buying that would have happened today. Okay, final thoughts from our experts. And Sumeet, assuming that it all turns out as per script tomorrow, what next for the markets post 12 noon tomorrow?
Markets are positive. Technical chart says that markets are headed higher. I think overall we should see a positive move, and on higher side, as far as the index move is concerned, we can see a move till 10,900, 950 levels, closer to 11,000 also. There is a possibility that we might see in the next couple of days. If by chance there is a dip or because of volatility, if we see any correction from present levels, then that should be used as a buying opportunity, because the longer term time horizon suggests that next couple of weeks or next couple of months can be good for markets, and from here on we can see a good upside move in Nifty as well as Bank Nifty. So my bias is positive on markets. Okay, positive bias on market as being suggested by Sumeet. But I mean, I know you're staying away from Nifty or Bank Nifty. I'm just asking because we're somewhere about 10,800 today. And if I look at the open interest build up on the call side is higher, almost 35 lakh open interest is there, 37 pardon me, and on the put side is 21, 22. In the last 2 to 3 sessions, there's been more put writing around these levels, which has come about. If one were to ask you the range, at least in the near term, what would that be?
I think the put writing has been a positive surprise, Navneet. So if I were to look at the range, I'd say now 11,000 to 7,000. If the outcome is positive, we'd probably see a 150 point rise. And if the outcome is negative, we'd probably see a 200 point fall. I have a feeling we want to see a positive outcome.
Interesting. Okay, gentlemen, thank you so much for joining in today and giving us your perspectives. Always appreciate having you. And with that, it's a wrap on this edition of Countdown. But stay tuned on the other side. We wrap up the day's trade on Bloomberg Quint's Market Wrap.